All right, welcome everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you please type number 1 in the chat box, let me know that you can. I would greatly appreciate it. Afternoon, Jim. Hey, Roman. Morning to you. Thanks, Andrew. Excellent, everybody. Thank you for that. Yep, camera's off. It's a coming. I always like to just get the volume started first to do one thing at a time, but I always appreciate the reminder. All right, now it's on. I just have to flip it open. Whoa. My monitor just went off. What happened? All right. I think we're good. I don't know what happened. Morning, Alan. All right. Thanks, Andrew. My drawing tools are open, Jim. That one I got right today, so I appreciate it. All right. Welcome, everybody. Hope you have a great day. As we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. So hope you all had a great weekend. Hope you got to think of something other than the market. I know it has been frustrating for so many, especially if you're holding on any long positions, you're trying to figure out how to manage it and the likes. It's tough, right? So we've been very busy beavers the last couple of weeks with our dog of 15 years having passed. We spent a bunch of time shelters, rescues. We don't want to do anything that is not a rescue. That's pretty much a prerequisite for us, is we want a rescue dog. And there's so many of them. The main rescue by us on Long Island is, they got over 100 dogs that you see. And my wife got into the back room yesterday, and there's another probably 50 or 60 back there that aren't even out yet. And after very long, drawn out process of looking, where is it? Okay, I thought I had put her in front. So this is Sadie. We are foster to own is the terminology. My wife has a very highly allergic reaction to certain dogs' hair. We never know until she's around the dog for a little bit. So hopefully it all works out. But this was her car ride home. This is her first car ride since the shelter when someone dropped her off. They found her tied to a post on a highway. That's great. Highway. Everybody walks past on highways, But anyway, thank you, Jim. Much appreciated. So a lot of anxiousness, a lot of uncertainty. We brought her home yesterday, and now it's nobody around her for in the house for 3 weeks. And if you meet someone new, meet him in the street. And she loves to walk. I know, because she dragged me out there first thing this morning. But anyway, let's go through our agenda for today. So we've got our follow-ups will be first. Today's trades, economic reports will come next. Market review, upcoming future trainings, our weekly training topic, and your stocks review. So we may finish up a few minutes early today is my goal, just for an appointment that I've got scheduled for today. So here's our follow-ups page. Make sure you are following along. Sean and I shot a ton of videos about a week ago that are starting to feather their way out to the various platforms. So make sure you check them out. Right, today's trades. What did you do today? Drop them in. Right, let me know what trades you did. I've got none off for today. Right, and that has just been her first full day at the house is today. We brought her home yesterday early afternoon, noon, lunchtime. We brought her home yesterday, so it has been very much playing with her, trying to get it. She's 2.5, so trying to get out this her anxiety, but just she's 2.5. She needs to move, right? Let's see. Patty said couple of contracts on SPY for $134 and on NVIDIA for $190. Great job, Patty. Awesome. That is absolutely fantastic. Good job. So let's see. Let me bring up no trades today. Jim said, yeah, and a lot of people are the same way. It's just I'm not doing anything right now. I got 3 from last week. I didn't do a lot of trade with Rob's last week, but these were for Wednesday's trading day, right? Which was the 5th, right? So 3 days back. Which is 4 days back. You got to look for today, right? So, but here's the day. Okay, it was a switchback trade. We got our bounce off the 120. We closed up here about 124. Life was good. It was $125 on one contract for ARM. SHW was the next one, right? Same day, which is right back here. It's going to move in a moment as today comes on, but it's right here. So another switchback trade. We moved up, retested, bounced. We got in about 357.5 and got out at 362 and jingle when we got out there this day. So overall, really nice setup. And I'll show you the results in a moment. And then SPGI is the last one. Also done on Wednesday, right here. Okay, on the 5th. So switchback trade. So we closed here. We're looking for a bounce off the 515 or a drop, a retest, and a fail off of the 515. Either way works. We got the bounce. We would have had our moving average was our exit. So we were out. So we were in at 516, out at 524.90. So just to share with you the numbers so you can see them, these three contracts, these three trades, one contract each is all we do, right? You don't need a lot of money to do the trades, is what the whole idea is. So we're up 264.25 on ARM, we're up 334 on SHW, and 641-ish on SPGI. So overall, not bad. Since June 25th, when we started tracking the results, we're up $18,600. It gives us about $210 per trade on average of every trade that was taken, win, lose, draw. We won on it, we broke even on it, we made money on it. All three of those were 89 trades since June 25th, and we're up $18,000 on one contract, right? So if you're not already an active member of Trade with Rob, make sure you check that out, folks. It is free. And not only will you get the email that says the video is ready, if I don't have a video that day, you'll get an email that says no video, but here's all the candidates that's on Rob's list for today. And you'll get not the 3, but 10, 15, 20 potential trading candidates for that. Okay. So let's see what else you guys put in. Trip said AMD scalp for 20%, about 8 minutes. Nice. And of course, that would be a Hakanashi scalp. Yeah, Jennifer said, please explain collars and protective puts again. My account is going down. So a collar is when you have a covered call, you buy a put. And I can't really go into the strategy. We don't have the time for it today, but you buy a protective put, Jennifer, when you own a covered call, right? Yeah, you own the stock, you sold the covered call, you buy the protective put for the downside, right? Or a collar. But it's no different. A protective put could just be that you have an outright stock and you want to buy a put option to protect the downside. The problem is you're trying to buy car insurance after you've had an accident, right? The market's crashed down already. It's happened. It's not like it may happen or it could have happened or it's happened. We've had this crash down already. I'm not saying getting into protective puts is a bad thing. What I am saying is you really have to evaluate where does bad thing become really bad thing. Are we bouncing soon? Is the news coming out? I did hear something this morning of Trump hinting to a potential recession. And I'm not surprised. I've been saying it for a long time. We need to lower the damn interest rates, right? That is not helping us as a country. And Powell, in my opinion, is doing the absolute drop dead wrong thing by keeping them up there. Different opinions of this year, 1, 2, or 3 drops this year. I don't know. I'm hearing 2 from the people that I associate with, but 2 quarter-point drops. And if we start if you see a half-point drop, the Fed realizes how much trouble we're in. If you see a half-point drop. Yeah, trade on Trip. Yeah, there you go. Congrats to you, Trip, from Patty, on your trade. So overall, great couple of days. Like I said, today was nothing for me. Just too busy with the new pup. Just trying to keep her busy, wear her out a little bit, so when she does go into a crate to lay down, she can decompress a little. All right, so let's go back into our presentation, economic reports. All right, so let's go there. Let's go ahead and we're going to go over to Forex Factory. It's the only place I normally use is Forex Factory. Let's see, let's get more. All right. President Trump speaks. They made it orange. I don't know why, but everything he says lately is rocking the market. But 10 o'clock tomorrow, we've got JOLTS for job openings. That's a big report. It is after the market opens. Keep that in mind. everything on Wednesday is pre-market. They're all 8:30. So unless you're trading futures, this will affect the market, but not when you're in, not when you can do anything about it. Same thing on Thursday. It's all pre-market, but they are big reports. CPI, PPI, unemployment, they are Fed reports of what they're looking for. No different than Friday sentiment reports, but 10 o'clock markets open, right? So particularly consumer sentiment, inflation expectation, the Fed might focus on a little bit, but I think sentiment is going to be a bigger draw for them. Remember, if you ever want to know what's in this and what more about it, just come to the yellow folder, click on it, and it'll give you the detail behind that report. So we've got some reports coming out this week that could have a dramatic effect on the market. The scalper Steve, who's our economist at the one of my masterminds, says that on the economic reports, to make life simple, they just need to put down that Trump will be speaking every day, right? Just put him on the calendar every day, because it seems like he never is not speaking. It may not be official, it may not be scheduled where we're doing an address to Congress or to the nation, but not his 100 days, but there always seems to be something that he's out there with. And that is good or bad. Folks, right now, we just don't know what's going to drive the market in what direction. We haven't seen some of the things happen yet. Prices getting lowered and the likes. And we've seen decisive or divisive things to that people are trying to do to not let some of that stuff happen, which of course is horrible. Ukraine, China, hostages. I don't know what's the right words, impressed and bothered at the same time that we have not taken action against Hamas with the prisoners there. I'm surprised Trump has not done something already, since there are still American hostages there. So I don't know. I know there's backdoor deals going on right now. We don't know what they are, but I know that he's got his fixer over there talking with Iraq and Iran and Hamas and all of those. So we'll see what comes from it. But there's so much uncertainty out there right now. And with what's going on, I mean, even though we got 40 million eggs somebody gave us or something, that's great. Doesn't really fix our problem of we've killed off so many chickens that we're going to have to come up with some continuous way of getting relief, right? Tariffs is the other big one, right? I think most people don't understand. I don't fully understand, but most people don't understand enough about them. They take it the wrong way. It's a negotiating tool to this president. So I think you got to look at it like that, as what's the negotiation coming out of it. Every time we do it, it seems like something better comes from it. We're going to give you a tariff. Okay, but wait, we're not going to do it now because you're doing this instead. But all of this is causing the negativeness in market right now, and it definitely is leading to some concerns in what happened. Yeah, exactly. Said he'd end the war in one day, right? And he'd already been working on it. And then Ukraine stepped up and said, all that happened that day when at the White House, which goes to show why it's probably not a good idea to have those things live, right? With reporters in the room. Better off to negotiate everything, come back and say, okay, here's what we figured out. Let them ask questions then, instead of, seeing exactly how the sausage is made. Jim said 319 FOMC hopefully drop, but CME Group site shows 97% chance of no drop. Exactly. And I think there lies part of our problem. If we're getting ready for a recession and we're doing it with high interest rates, it is not going to bode well. Powell was asked if Trump asked him to step down if he would, because as far as I know, Trump can't force him out because he has a term, and he said no, he would not. And he believes that we're on the right path. Maybe, but I think we went from one of the best economies the world has ever seen to a load of poo-poo right now that we're dealing with. And it's not it's not easy to go back and try to fix what broke with such high rates getting put in. I mean, just ask yourself, how many people do you know that have wanted to buy homes but cannot right now because of what the Fed is, what the banks are charging for interest rates? It's crazy. Jennifer said, I totally agree. Yeah, gold to poop. Boo. Boopa, right? Octopus, boopa. Yeah, so there's a lot happening. The economic report's great. the president, you gotta keep on top of what's being said out there, folks, because that is a lot of it is a major driving force, and it could be one question in the middle of a document signing, an executive order or whatever it is that he let reporters ask. That one question, not practiced, right? Not on script, comes out with an answer that maybe taken the wrong way could drive the market one way or another, up or down, right? So there's always some concerns. Exactly, Jonathan. Brenda said, can't expect the Fed to step in and fix everything that's gone on. Exactly, and without a doubt. But this is where we're at, and this is the market in hand, which is why our topic today is about S&P levels, right? Which we'll talk about in a few minutes. But there's no question that the market is giving us, we're being dealt what we're being dealt. And you cannot do anything to change what the market is going to do. If I said right now, I'm going to give everybody in this room $1 million cash, and I'm going to have all of you go and buy Apple right now, $1 million worth of Apple each, you're going to hit enter at the same time, you'll see a small blip in Apple's price right now because of everybody buying it at the same time, and it'll come right back to where it was, if not lower, after we're all said and done. And the market will not move anymore, although we would have bought 100 million shares of Apple, right? It wouldn't make a difference. $100 million worth of Apple, right? Sorry, not shares. $100 million. We are not in the game. We are on the sidelines. Your job as a trader is to be able to jump on the coattails of the people that are playing the game, and that's the big guns, the big boys and girls. It's not us. We're completely on the sidelines, right? I see the guy running down the field. I'm going to jump on his coattails and go for the ride, right? I'm not the one running the ball. There's nothing I do that is going to move a stock unless I buy some penny stock, and I'm it. I'm the only guy doing it. Other than that, it's not going to happen. Yeah, do you need my bank account number to send me the million? Oh, goodness. Where's my suit? And that's it. Trade goes against you. Yeah, exactly, Roman. It's horrible. We're not on the sidelines. We are watching on TV from another state. Yeah, another planet, maybe less even, right? When you think about it. The point being is, and all of you need to understand that, we don't control the market. We don't. Can we move an option if all of us jumped in and bought the same option right now? Yeah, it normally trades 40 contracts for the day, and someone went in, or a bunch of us went in and bought 1,000 contracts, and yeah, we'll move that contract, but we're probably not moving the price of the stock, right? And if we do, it's going to be minuscule, right? A company that I first started teaching for, the company I took my very first stock market education training for, they had a pager. A what? A beeper, a pager. Go look it up if you don't know what it is, okay? Little device on your side that beeped and you get a little message on it, a phone number, right? And then this was a little bit more sophisticated where it started doing data. And they would send a page out that had all of the trades that the owner of the company was doing, okay? And people would jump in on that. I bought the $55 call on this stock, right? And people were jumping in on that. And then you see the owner sends a text out that says, hey, I got in at $7. I sold at $9.50. It was awesome, right? Well, you got in at $9. And then it dropped from there. Why? Because you were one of the last ones to get in. It crescendoed. No one was buying anymore. It dropped. The price of the stock stayed right where it was, right? It was all a matter of what cycle you were on, how fast because they did it in 12 different cycles. How fast did the text message come out for you, right? So we're not in the game. We're on the sidelines. It all goes back to that. Brian said, I believe we're seeing the real economic data now that Trump's in office. We might have been given BS in previous reports. I never have trusted the economic reports, guys, ever in my life, in my trading career. And have the conversation with Ryan Litchfield one day of what he found out by calling the federal government and trying to get information about the jobs report. And he went from whatever it is, I think it's E, right? E1, E2, E3. He went up the line to like a 14 or something. I forget. I don't remember the number, but he went pretty high up. And they basically came out and said, our jobs report, we use a sampling of about the same size data that ADP does. You're the dang government. Why don't you just use everybody's data? It's not like it's not recorded somewhere. No one's sitting at their home writing checks manually and sending them out for unemployment. Why can't you run unemployment and just run it into a computer system and get a number from there? Or you need more time? Send it out next week instead of this week then. Go another week until you get the answer, right? The numbers are there. I am not I am not a believer in most of the economic reports, and I definitely believe that things are manipulated. I heard a report, and again, I haven't seen the data backing it up, but a report that Janet Yellen, towards the end of her term, pre-election, had manipulated some of the debt we were in, got rid of some of the long-term debt, made it short-term debt. And the bad thing is now that interest rates had gone up so much, we're going from what we would have been paying, I don't know, 3% to now we're going to have to pay 5 or 6%. And they said that extra interest alone is devastating how much more it's going to cost us. Right. So there's always backdoor deals going on in the government. That's why I'm a big believer in transparency. Look, you may not like the way other countries do certain things, or other states even, but you go down to Florida and there's no sales tax in Florida, right? Wonderful. The tax is everywhere else, but it's not a sales tax, right? It's not, I got paid, they took tax out. I went and buy something, they took tax out. I die, they take tax, right? There's definite benefits to the way taxes are done. I would much rather see the income tax go away and you got paid. Whether you spent the money or not, you got paid. You made $100,000, you paid 28% across the board, period, the end, everybody pays the same thing, right? And there may be a scale in there, but I am a very big believer of abolishing the IRS and just making it a mandatory, you pay this, right? And stop with some of the garbage we're dealing with. Yeah, transparency that we will never see. Yeah, good point, Brenda. Very good point. All right, market review. Let's go take a look at the S&P 500. Let me take this down. So guys, we really need to, it's been a while now, so we really need to break this back to where the run started, get some context of it, and then we'll dig deeper into what's happening today, right? So we've got the V bottom back here on the S&P. We moved up, sideways move. We moved up to that high. We're in that sideways, and then there was our pullback from there, right? Although this was really the pullback right here. It went to the 236. That's what gave us the pattern. Okay. From there, I drew from the lowest low to the highest high of the fib down to the pullback of the lowest low in that setup there. And it gave us an ABC pattern, right? And it gives 3 lines, 1, 2, 3, green, purple, green, right? 2, 3, 6, 618, and 1. From there, we broke out. We put in another all-time high. At this point, these were all-time highs back here. Put another all-time high in. We went into the sideways move. We put in, some step down lows, lower highs, I should say, and some lower lows as well in there. And then we had this great catalyst that drove us up to an all-time high. Not by much, but it didn't matter. We were there, right? Then we started stepping in with the lower highs, the lower lows again. Here's the next lower low. We pulled back to this blue zone, which is this 618, 59.91. This 6,008, and then the 6,000 level, the dotted line, that dot dash line in there, okay? And we took a really nice bounce off there, put another all-time high, once again, not much higher, and then the bottom just seems to have fallen out. Do we have a need to redraw the fibs right now? Without a doubt. Can we? Nope, we don't have any bottoming pattern yet inside of here to redraw the fibs, right? So what are we looking at this point then? If we're sitting back here saying, okay, we've had this drop right now, and if we were up at, Jim had given us this last week or the week after. Here we go. I just wish it would let me. I don't know what we got to do. Andrew, we got to figure out how to make me copy from the webinar chat. There's got to be a setting in Zoom somewhere that allows me to do it. And I don't care if everybody can do it, but so 61, 47, 43 was the 52-week high. The fib 618 was 55.84. 10% drop would be 55.32. So we're talking about 55.84, but 55.32. I was just getting ready to figure it when Jim dropped it in, so I appreciate that. Yeah, it broke the 50 percentile line, Brenda, for sure. Right here. It chipped away at the ice. It chipped away at the ice, right? 20% drop is 49.18. Guys, here's my biggest concern right now is we've got this brown line right down here, right? And that brown line is 54.73. That is a very long-term midpoint on our fibs. Okay, so we have a fib line up here at that 67.50-ish level. This one here at 42 quarter, 42.50. I can't give you the exact number. And we've got this brown line is halfway between these two lines. It's a midpoint. It's a 50 percentile. It's a fib line. Okay. That was a very important level. If we go back and look at a bigger picture, I got to be careful because it'll get too, if I really go back to a longer term photo, you won't be able to see anything. You know what I mean? So I said, I've got to be careful. So we ran into it here, but if we go back historically, this brown line, right up in here, we started approaching up to that level right here on June of 24, right? So great run in the market, June of 24, we started to run up to it. There you go. Andrew typed them in for everybody. Thank you for that, Andrew. He was able to capture it. This is what, yeah, you can share that to everyone, Andrew. Thank you. Thank you. So this is the text that Jim had put in, folks. And listen, this is, to me, this is what makes Power Hour so precious, so important, is others like yourselves, like Jim and others that are contributing and coming up with this and ideas and thinking and what about this and what about that? Every question just drives another question of, ooh, I see this. What about if we did it this way now? I'm a big advocate, a big fan of that that type of pattern, movement, whatever you want to say, within our community. So 67.65, Jim said, is a fib line, fib number, and 41.81 is a fib number. Yep. So which is the next line down, the black line. So guys, we're sitting right here on our fib. We did break through the 50 percentile. I'll talk about that a little bit more in a moment as we get into our trading topic for this week. But we've got this 55.84 as our next downside target. We have got, if you look at it here, watch this run in here, and I'll be close. I'm not going to be exact. I don't care. It's good enough. We're about 475 points. Right now, if we drew a fib off of this move, we're over 500 points. We already have surpassed the original fib, which is one of the fib rules. Says if a new level, a new move is bigger than the original move, it's time to consider redrawing. Problem is we don't have a bounce. Oh, well, could we have drawn it off of here? I guess. I'm looking for consistency, though. That gap down and then this move back up to fill that gap, I'm not worried about that. And then we gap down all over again, right? It's just, and it's the where, right? That really is one of the things that bothers me more is where it happened. If we look, this close right here, we gapped to where? We gapped here and bounced. That's this blue zone, right? So that was a critical location for us to bounce off of. We failed, came back, right? This one we came back up and we threw the blue zone, but we filled that gap in basically, right? Next day we gapped down. So this right here, hiccup, it's really not a pattern. It's not something that I'm worried about. It's not something I'm looking for. But every day, the next day, then we get a good move down. And then the day after, we get a little bit of a bounce and we close higher. Today, we take a big gap down and we go line to line. It's called a door knocker. Ideally, your candle looks more like this for a door knocker. Right? Up or down doesn't matter, but your tops and bottoms, or you're basically playing in those two lines. You could have a small wick on it, but these longer wicks are really not what you're looking for, okay? But overall today, big gap down, big move down. This pierced through the lowest level right there, which is the 50 percentile. Not boding well for the market itself as far as for strength and or bullishness in the market. And the problem is we are very heavily data driven right now as far as what's happening. You watch NVIDIA, which I think was the second biggest loss The second biggest effect on the S&P, only next to Apple today. MicroStrategy is getting crushed. I think Booking was one. Well, we're getting some up. We're getting a bunch of ups now. What's happened? Right, we're getting a bounce because if I don't know, are you able to see this? Can you guys see this right here? This data. Just give me a 1 for yes or 2 for no. If you see the quote board I brought in, yes. Okay, good. Okay, so this change column, the only thing that was green before we started was Booking or CMG. It was one of them. There was only one over here somewhere that was green. That was it. It was just one. And now we've got more than half of our stocks. These are pop stocks. More than half of the pop stocks are green right now, right? Meaning they're moving in a bullish pattern. Change on the day, percentile change, right? And this is real time, right? That's in real time, as my SPX chart shows. Yeah, Roman said Bitcoin now down below 80,000. You've got just the cryptos are no different than our stocks, right? Crypto ran up based on what on Trump winning and the things that they talked about. But I would watch crypto very carefully. If what I heard over the weekend does actually come true, if we build a sovereign wealth fund, Trump wants to start it with all of the confiscated Bitcoin that the federal government has taken from criminals, right? If we do that, it's like $200 billion to start that fund with, right? And if the U.S. is going to, whether it's confiscated funds that they're going to put in there or build out into it or add to it or whatever it is, I think that interest from our government, from the U.S. government, will be enough to drive it, even if it's against the market, right? Against what's going on with the S&P 500. And for a while, crypto was kind of the gold, right? Where stocks are going down, gold goes up, right? And then Bitcoin went up too. And then gold got to a point where stocks were going down, gold was going down. Wait, what happened? Right? So it kind of lost some of its synchronization to the market. Crypto is kind of the same thing. Now, all crypto, again, you got to be careful when it comes to crypto, right? If you're the trader guy in crypto, in and out, trying to trade a 0.59673814298 penny stock, crypto, and you're trying to finagle in there, and you're doing a half a thousand, a 5,000 or 10,000 share lot. More power to you, right? I don't trade into those. There's I can't remember her name, but she made a comment on an Instagram post or something. There was a guy with a microphone at a party, and he was interviewing people, and she said something, and all of a sudden she went viral, right? And then she got her own podcast, and she got brought on all these big podcasters networks, and she came out with a crypto coin, and it was like a pump and dump. People put their money in, she sold all hers, the coin dropped to nothing, and she hasn't been heard from since that I know of, right? So that's the problem you run into with some of these lower priced cryptos. You got to be careful. It's like trading penny stocks. Now, I know people that trade penny stocks and they crush it. I can't do it. Right? The motto when I first started was you had to trade 10 penny stocks. If you traded 10, one of those 10 were going to take off, and you'd make all your money back from your 10 because nine lost. You'd make all the money back on the one. Now they say it's something like 30 or 40 stocks you've got to trade to get one to take off. Yeah, I got much better ways I'd like to use my money, and that's not the best one for me, right? It's not my choice of how I'd like to be my trading day to go, right? At all. Okay, so you got to watch what's happening market-wise. You got to watch what's happening stock-wise. You got to start doing comparisons. Remember this when it comes to the market. If the market is bearish, which it is, 70 to 80% of all stocks will move in a bearish pattern. Then why fight that? Why fight it? Why do it? Right? My team today in a meeting said, Rob, you mentioned something the other day about wanting to do a class called micro day trading. And they wanted us to put it on in like September or something. And I said, nope, we can't do September. It's too far out. Let's find something sooner than that where we've got available, because we're already planned out for months. We've got speakers are committed and time slots are committed for months, right? So we do have it on the docket right now for a June class. And that class is very much relegated around what's happening right now, the way you would be trading right now. And when I say right now, I've been doing this now for about 3 years. I've been trading this now for about 3 years. And when I say I've been doing it, I released it quasi-publicly to part of the inner circle in a private meeting in my office when we did a mastermind / inner circle trader super summit on a Friday. We went back to my office on Saturday with inner circle, and we went, and that's the part of the pattern that we went through over there, right? That training is going to be strictly on how do we capitalize on moves that are taking place every single day, right? And how do we not get in a trade and get our head handed to us? You know, where in the morning you get in a trade, the stock is dropping, you buy a put, everything's going good. You turn around and the stock is moving back up. It's gone through your stock, through your stop price, or and you're stopped out of the trade, and you're realizing how much worse the numbers were than you thought they would be when you would have gotten taken out because of volatility flip and the likes, right? So we're going to go through some specific examples. It's going to be a 1 hour training. It really is going to dig in. It's directional trades. So if you look at covered calls, it's directional trades, right? If you are a spread trader, you could use it for those as well. The way Amelia trades credit spreads, you could definitely use this for credit spreads also, right? It's got a great mechanism to work for that. But you need to look at you as a trader and say, okay, what do I need to do today to be able to trade this market and sustain? Because here's the thing, in business, right? The expression is only the strong will survive, right? You get hard times, hard economic times on business, the strong will survive, right? And then all the smaller companies that go out of business, get glommed up, bought by a bigger company. And as times get better, those companies start to flourish as a much larger part of an entity now, right? 2 or 3 companies all combined into one. It's no different with traders, except they're not getting glommed up. You're just disappearing, right? These tough economic times, these tough financial times, these tough market times are where traders tend to fall off the edge, right? And not come back, or take years to decide, all right, let me go give this a shot again. Your goal should be to get through this. If you can thrive in it, that's awesome. That's awesome, right? If you can't thrive in it, but you can sustain in it, that's really what's most important right now. Here, if I go over to, let me see, where is this? Okay, it's up there. Let me open this one up. I think I have it marked. Come on. Okay. Let's see. I do. All right. So this right here, this is power option plays. Well, you can't really tell that. This power option plays, these are all close trades. I have not moved these over to the page. They'll move over tonight. But these are pop plays, trades, one contract trades. That's all these are, just one. So if we go back and look right in here, all right, that was February 24th. Why did that happen? Let's see. Let's undo that. All right, let's merge that together. So we had a break even, we had a trade go against us, but in that period, right there, we're up, which is Feb 24 to Feb 27, 4, 5, 6, 7, 4 trading days. Okay. Yeah, nothing on 28. 4 trading days in there, and we're up $12,187.50 on one contract. Okay. One contract over a 5-day period. Why? Because the expression, you got to be in it to win it. That's what this was. The week before, we're up $1,800. The week before, we're up $4,700, which is a really good week. The week before, we're up $1,189, right? So if we, I got to move this over here first, though. If we look at a larger number of contracts where we trade 10 and or 4 contracts, we've gotten 86 trades off this year, right? This trading year, calendar year. So this right here is that same time period, 21, yeah, but 21 belongs on the top. I don't know why these boxes moved. These two don't belong in here, right? So here, so let's do this. We need up to line 84. Okay. So let's see for that same time period that we looked at before. It's $121,000. This is off a little bit. I don't know if it'll let me drag. Yeah, it's not. All right, so let's merge that. Okay. Let's get that number right. So that was $19,000. This was $31,000. I don't have them up here. 61, 19,000, 19,000, $2,900, right? And all of a sudden we step out with a $122,000 week, right? You got to be in it to win it. You never know when those weeks are going to come. We had one trade go against us. One trade was a break even. The one that went against us was $2,730. We did have one killer trade inside of there that made a big difference for us, and that was that one Tesla trade, right there, for $32,000. We had a couple of $10,000 ones. Eli Lilly, Meta, and then another Meta right there was a $12,000 trade. $17,000 one here on Tesla as well. So we had some really good setups present themselves in there, okay? But when you look at these trades as they set up, and if you see the market is going up and that stock is going down, and you look at it and say, yeah, I don't want to fight that trend, don't. As a newer trader, anybody who's not at a point that you're following the market and you're successful in your trading, probably should, most anybody, probably should only trade in the direction of the market. That's 70 to 80% of stocks that move in that direction. You will dramatically increase your win-loss rate if you just do that. Market's going down, I'm only trading bearish today. But I only have one company bearish on my list, and that's the one you trade. Yeah, but I don't really like them. Then you don't trade any of them and just go play golf or fish or do whatever you do. All right? Gardening, woodworking, whatever. But trading for the sake of trading is a mistake. Okay? So you don't want to do that. You don't want to trade just so you could say, yep, I did it. All right, let me close this down. All right, so let's see. Jim said, interesting, to start a sell formula, enter equal, you enter at some. Yeah, I am old school at some. It's just ingrained in my brain. I learned Excel when Excel was taking over Lotus 1, 2, 3. Right, unless that if you're just playing, do it in a paper account. Absolutely, you should only start with that paper account anyway. I can't drive that point home enough. Right, teaching an event in New York, brand new student walked in. The guy was a hard money lender for the real estate industry, people that do flip houses. And his whole business model was, you wanted to borrow money, bank didn't want to give it to you, short-term money, so you could buy, get your construction equipment, materials, fix the house up, sell it, and then pay the loan off. So, he was getting 15, 17%, whatever it was for the interest on it. So he would lend you the money, and he would immediately put a construction lien on your home. So you couldn't sell it until he got paid immediately. That was part of the contract, the arrangement. It was in writing. You signed it. You knew it was happening. Well, he's sitting in the front row, big Italian guy, right? He's sitting in the front row and just massive profit coming in this guy's business, high seven figures. And he's sitting there, and I keep saying, you got to paper trade, you got to paper trade, you got to paper trade. And he's made snarky remarks about it through the 2 days as I'm teaching. And I look over at his wife, who's sitting next to him, and I said, he's not going to paper trade, is he? She goes, oh, no. And he goes, listen, it ain't real if you don't put real money in. You got to put real money in, even if it's a little bit. That's what's a little. He goes, even if you only throw 50 grand at it. So I know some of you just choked on your coffee. 50 what? Only 50 grand at it? I saw him back at the next workshop I taught 3 months later. I asked how he had done. He lost 50 grand, stopped, came back to learn paper trading, and the things he missed, right? Or thought he knew the first time through. And then it was going to get back into it again, right? So I don't care how much money you have. I've got a lot of money. It doesn't matter if I lose it. No, it matters to your psyche in the market. That's what really does matter, right? It really matters there. So, all right. So upcoming workshops, we've got Inner Circle check-in this evening. We've got March 13th, which is this Thursday, is our Inner Circle 2-hour class. Mastermind group on the 11th. We're going to pick up on our core training tomorrow. For those that are in Mastermind, it's 2 hours tomorrow evening. Trading You is on the 17th, which is next week, as is Monster Market Movements. Power Hour Trading Coaches Playbook are on regular schedule. Futures Trading Simplified is Brandon, of course. I spoke to Brandon on this training, folks. He's laid it out in such a way that he's going to singularly work you into a systematic approach to just do one thing. Just get really good at one thing. All right, so don't miss out on this training. Power Hour, Covered Call, Explorer, E-mini, Think Tank are all on the regular schedule. All right. You're going to see emails come out for this. I'm guessing Andrew's going to drop a link in for it. You should not need a code for it, but Trading You, which is our mini mastermind, it's our first level mastermind. We've done away with the annual on it. We did not offer it for a while now. We are adding it back in. So the annual is on special at $9.97 if you're interested. Don't miss out on it, because it goes back to, I think, $19.97 or $14.97, something like that, after this is over. Yep, no code needed. Amelia said, thank you. Thank you. All right, good. All right, weekly training topic. The next key level for the S&P 500, kind of why I left off on the S&P and didn't move on. I really want to talk about one particular area, all right? We went through the levels of what's happening with the market here, V bottom, V top, all of that good stuff. That pullback here that took place down to the 382. We have moved down. You know, if you look at where we moved from here, right? We went 1, 2, 3 standard deviations before we bounced. Then from here, we went 1, 2, 2 and a little bit. So it's always 2 standard deviations before it bounced. From here, we went 1, 2, 3 standard deviations, and we bounced. From this, you got to get down to the first deviation. 1, 2, we're now at 3 standard deviations. So are we going to get a bounce here? Maybe. We haven't seen more than a 3 standard deviation move up to this point. Each fib line to fib line is considered 1 standard deviation move. Okay. You will normally get 2.5-ish fib line moves on a standard move. Okay, that's the norm. That doesn't mean some things don't go 8 deviation move. It does happen, but it is certainly not the norm. It's more the exception. We've had a lot of pullback here, a lot of concern, right? Let me zoom in on this actually. Let's bring this in. Make it bigger, right? We went from this high right here. We went down 1, 2, 3, 4, 5, 6 trading days to the downside, 1 day up. Right? 2 trading days to the downside, 1 up. 1 down, 1 up, and right now we don't know how many down. Right? But that's where we are. So we're getting this, let's get a big pullback, whoo, sigh of relief. Big pullback, whoo, sigh of relief, right? And we're getting little bounces and little rewarding back inside of there. But we have now moved overall from the highest high to the lowest low. We now moved 515 points to the downside on the S&P, right? Expensive proposition to the downside there. Period. The end. It's an expensive proposition, right? So where next, right? Where do we go next? Bring this back out a little bit more, and I want to scrunch down. Now I need to see the entire fib. You have to see the whole fib. I know what's there, but you've got to see the whole thing. All right. So we're sitting right now, and I think it was I forget, it was either Jennifer or Brenda maybe had said something about we broke through the 50, and I just blew it off when she said it because I didn't really want to talk about it there. But we chipped away at the ice today at that 50 percentile. What does that mean? The move from here to here, from A to B, we've given half of that back already to this 50 percentile line, 50%. Right? Now, if we stick with the last couple of days, we'd be looking at a bounce potential tomorrow. Right or wrong, I don't know if it's going to happen. If I knew that, it'd be a whole different event we're teaching here. I don't know if we're going to get that bounce or not. I do know that because we chipped away at the ice today and pierced through that 50 percentile, we basically said to the bears, go right ahead. Doors open. I cracked it all up for you. All you got to do is push on it. It's going to open wide up. Okay? Okay, Jennifer said maybe it was Brenda. Thank you for that. But go through. It's open. It's ready for you. It's all yours. Do what you got to do. That's fine. Right? But if that happens, you've got to ask yourself, where does it go next? If I'm sitting here tonight, market's closed. Market's closed, right? And I'm looking and analyzing this candlestick. The very first thing, now I know this purple line is a 618. I don't need to see the number on the far left. I know because it's purple. Okay, it's a 618. I know that I'm looking at a downside potential move to that fib line. My analysis for tonight, meaning for tomorrow's trading, is this. Let me get a pen. And I'm going to mark it up the exact same way that I do if I was doing a switchback trade. I'm going to pick the side I like first. I like the downside better. I think there's great opportunity to the downside. Those of you that have not figured out the downside trading yet, you need to get it. Right? You will make more money in a downside move faster than any bullish directional move you will ever see. Ever. Right? Dollar day for day type movement. You never tend to see these types of moves on the bullish markets. Ever. Right? As fast and as quick and as hard. Right? So I'm looking at this of, I'd like to see a small move down tomorrow on the market. I'd like to see a pullback up towards this fib line and then a fail. And if it does, that puts me at my 618, which is the 5884. Yeah, we'll call it 5884 level. Okay. Can we make it there in one day? Well, we've been doing, this was a day, right? This was a day here. Yeah, we could do it in a day. We could do it in a day, right? This one maybe not so much. But for the most part, yes, we can do it in 1 day period of time. All right? So I like the downside better. My secondary would be the upside move. If we make a move up tomorrow and we pull back and bounce, my resistance is going to be that next fib level. So that is the 5970 level, we'll call it 5970. Right? Now that's the level on the S&P. You still need to equate this back to your stock. So whatever the S&P does, if it bounces to drops to the downside tomorrow, I am looking at a bearish move tomorrow. Period. I'm looking for a bear move. Right? I don't want, but their stock's going up. Yeah, but not ones I want to trade. I'm going to go after the directional move that fits with what goes on in the S&P 500. You will increase your odds of being right by 20 to 30% just on that alone. Just by adding that to your repertoire. Stop fighting the market. Oh, but so many trades I could miss out on. You know what? You could do those later. Do them as paper trades. If you're doing some funded trading now, do those as paper trades. It's the opposite of the market. Stay on them, see how your process is working, how your trade setup works in the opposite market, but I would not be putting real money into it. Now, again, remember, ultimately it's your decision. I'm saying I would not be doing. That doesn't mean I'm telling you you're not to do it. You're going to do whatever you want to do. It's your money. You're an adult. You decide what works best for you. Excuse me. I can't do that for you. Okay? So these key levels are critical. if we scrunch down, right, that 54.73, folks, that is a level that we need to all have our eyes on. We are not that far away, right? I don't know how well the market holds up, and at that point, we've almost gone 100% give back. Roman said, "Don't fight." Jonathan said, "You don't advocate counter trends or meaning reversion trading at this time." So I do, Jonathan, if you're an experienced trader. Yes, I'm okay with it. If you're a newer trader, stick with the direction the market's going. And as the market shifts, you shift. If the market starts off bearish today and it starts going bullish, you could shift. I'm okay with that. I'm not saying the hard line is, oh, it was bearish yesterday, I'm bearish today. No, I don't need to do that. Right? But you need to have a direction of what you're looking to trade it and look to stick in that direction alone. Okay, thank you for that, Brenda. All right. So guys, I'm looking at the 618, the 5584, 5584. Brenda said I had said it wrong before, 5984. 5584 is the next downside target I'm looking for. And then 54 rather 73. Those are the two downsides. Right? All right, what stocks you want to take a look at? I thought we were going to finish a few minutes early. I did not. So I'm just going to message that I'll be a few more minutes to get into that meeting. All right. That appointment I had. All right, so MSTR, interesting one. They don't like that I'm late. Nope, MSTR. All right. We've already broken through the 882. We really need a new place to draw the fib off of here. The problem is once we start to bounce, it will no longer be valid because this is going to get blown away very quickly, I believe. That's our fib on MSTR. We're in a bearish bias right now, rank of 3 today. Big gap down. We're down 39, almost 40 points right now on MSTR, right? So it's just devastating. Expensive options, a lot of AI, components there. So 232 is the downside target. 272 is the upside target. I don't have a symbol grid on it, Roman. So let me go here. Again, we're at $58 Fibit. So yeah, we can make that in one day without a doubt. All right. So I hope that helps, Roman. SPY is the next one. So we're sitting right at the 50. That 557.5 is my next downside target. That 568.5 is my next upside target. Same way I laid it out on the S&P 500. Drop, retest, fail, buy a put. Bounce, retest, take off, buy a call. Very simple, right? Very simple. I like this one, Brenda, a lot. It's in a good switchback position right now. Whether you get anything out of it today, I don't know. We've already had a dramatic move, so I'm not sure unless there's a backfill that takes place. So I hope that helps. Meta. You're welcome, Brenda. Meta, we need to redraw, but we don't have a place to redraw from yet. So we're working off of previous fibs, which I hate doing, but we don't have a choice. Right? So we're looking at downside target, yes, 588.5, 577.5 as well, down here. On the 88, 9808, 18, 40, 36. Yeah, we don't need a fib in there. So on the upside target, you've got the 600 and then 624. And then we've got NVIDIA. Who has just been decimated. We're going to add an 882 in here on NVIDIA. Okay, so we came down and tapped into that 106.08. Now, remember, we were up at 150. We're now at $106. We've given back 33% of this stock's value, right? 33% of the stock's value. And to get back to where we were, we've got to grow 50%. If we're at 100, if we went from 150 to 100, we lost 1/3, right? But to go from 100 to 150, now it's $100. To go to 150, I need to gain 50% increase there. So, whoosh, right? Tough, 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 tough. All right, give me a second, Brenda. I'll go back to that one. Thanks, Don. I appreciate it. So that 106.08 and then 101 is our next downside target. If we bounce here, 111 is our upside target on NVIDIA. Brenda had asked where the fibs were on SPY. So that comes from 9/11. I did not realize that. And 10/17 are the dates. From the low on the 11th and the high on the 17th. On SPY. All right. Yeah, Donna said best of luck in the new year and the puppy. Yeah, it's all good, Patty. It's all good. It's all good. It's just a meeting. It'll still be there. But I appreciate the thoughts. All right, everyone, we're right on time. Listen, we dropped a whole bunch of links in there today. Go ahead and get registered for Brandon's class. If you're interested in trading you, do that. Oh, guys, if you already haven't gone and done this, watch. Let me do this. Go over to tradinglikeaboss.com, right? Right here, level up your trading with AI, free AI trading prompts. You all are nuts if you are not using AI in your life every day. This will give you the prompts, the reasoning behind it, the fields that have to be filled in. It'll tell you all of it. These are 10 of them that I created myself, okay, that I use. And it's all free. There's no cost to it. And my hope is when you have this, you're going to learn how then to use AI better because of the way we wrote the prompts and so forth. Now, I want you to keep something in mind. Well, actually, let me tell you this. I had some, I went to a doctor last week, got some blood work drawn on Friday. I got some of the results back in, and I asked some questions of AI about it, and I entered it in, and it came back with some answers. And I said, oh, well, here's my age, my weight, my height. These are the three that I got. What do I do for this and that and the other? And it came back with a 2-page document that basically said, yeah, you're all good if you do this, 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 and this, right? Drive me nuts, okay? So go ahead and download that free AI tool. Tells you what platform to use and the likes as well. Thank you. Enjoy the puppy. Saw you're dealing with family. Yep. Yeah, family issues. My mother-in-law's was still, dementia and all that is still hard. Thank you for that, Jennifer. Yeah, I mean, Brenda, they're all safe to use. Download that document. It'll tell you exactly who I use for this. It's real straightforward. All right, everyone. I'm going to leave the room open for a couple of minutes. Have a great rest of your day. God bless. And I will see you all at our next update. Take care, everyone. Bye for now.